Hey, what's up, everybody? Hopefully, everybody's having a great day today and a great day as well on both ends. And today, I just want to talk about the market and the futures. I know it's been a while since I've done a video like this, and I do apologize in advance. But always remember to first take care of your health and take care of your family first and foremost. It's always number one priority, right? So, some things that I had to take care of. I was a little bit sick, and then some family issues, but all is well, guys. I hope that you guys are enjoying the market. Has been offering a lot of opportunity, and it's just going up and down like crazy. The catalyst is momentum and everything like that. Like I'm just gonna open up oil just because this is like the most talked about topic in the previous like couple of weeks. So one thing I want to remind you guys is that we've been talking about this oil for quite some time already, and this thing has been downtrending ever since that COVID drop, and then it went to zero. And I told you guys in the past, I lost a lot of money because I was trying to buy the dip on here, and I kind of blew an account over here because I was trying to load up on USO calls, and they had a split, so everything just went chaotic, right? But y'all know the story. If hey, you guys try to buy the dip in during COVID, if you didn't, that's probably because you weren't trading during COVID, right? When it first popped off. But anyways, I always let you guys know that I'm following, the futures, and this is exactly what's going on with oil now. That we have a catalyst with Russia and Ukraine, and there's a lot of demand for it and low supply, and it's just intense, right? So what do you do at this point? And what I did is I ended up checking the time frame. Now check this out. This is the weekly chart, right? I'm gonna go back 15 years. All right, I want to show you guys something very important. The last time we hit recession was back in 2007, 2008, 2009, around that area. And look what happened to oil. It hit 147 a barrel, and then it collapsed basically because everything just went back to normal. And that took some time, guys. So remember that. So we're kind of in that same level again. We just broke over all this level over this 112 and the highs of like 115, you can say psychologically. And the catalyst is pushing it. So it's driving our oil prices very high right now. And on top of that, we have rate hikes. On top of that, we have inflation. So there's a lot of uncertainty in the market, and this market is just being balanced all across the board with so many things, right? And oil is one of them that's going to hurt a lot of people out there because it's expensive, guys. It literally is. And if prices keep going up due to inflation, then it's just going to be a lot more harder out there for everybody else. And it's very, very difficult, guys. So, if you're going through some, guys, stay motivated, whatever it is. Things will get better. These are just things that we go through, and we're going to keep going through these things, right? So it's just another bump in the road that we got to get through, right? So understand that oil is still rolling up high. There's still a lot of catalysts going on. Today, Biden spoke today. I can't give you all the details, guys, but just be aware that oil is a bit way up there. So don't go chasing these tops. If anything, you should start looking for some good catalyst that's going to affect oil to help it and to drive the prices down. Once that does happen, it's going to be a nice short position. Until then, I am not giving you any type of short position for oil just yet, right? So let's go look at gold. Let's go see how it's been reacting. This one right here as well is something that I talked about, and in the previous videos, I've always talked about like, hey, gold used to in the past be red while the market is green, vice versa. The market was red and gold was green, basically because it's more of a safe asset, and that's how it used to trade back in the day over here. Gold, that's how it used to trade back in these times, when there was like low volatility, and not everybody was option trading and things like that. So the catalyst now, towards the beginning of the year, it kind of just started and gave that reason for gold to go up. And maybe you guys are wondering like where the bottom of the market is going to be. Now, let me tell you guys something here. Gold is about to reach this weekly level after a huge breakout. Okay, I want you guys to notice is, and that's what the title of the video is going to be, right? I hope so. Looking for the bottom of the market. I know a lot of people look for it, and everybody's saying that it's going to come dropping down and everything. So how do you determine that? One of the good signs here is that gold kind of just topped out right here at this 2089. It's had a nice run. Okay, it's been a safe asset since the beginning of the year. So whoever accumulated shares right here was very smart. So they started loading last year and they were ready for this year. And now they're trying to unload at a previous high. I'm not saying that gold is going to top out right here, but there is a potential that we could stop. Okay, and there is also a potential that people are unloading, basically getting out of their safe asset. The safe asset because now maybe things may cool off with the war catalyst. Things may look a little bit better for the U.S. economy or the stocks in general and things like that, right? Now, again, I'm not sitting here and telling you guys that, you know, we're calling tops on things and we're calling bottoms, but it's just something to keep in mind, okay? Because it's a hedge. Gold is a hedge position against the markets. So if the value of gold is up, that means there a lot of investors are, you know, loading up on this and the market is basically trending down still. So there's a lot of insecurity, uncertainty with investors trying to load up on positions in stocks that have great value. Therefore, they load up on something that has a safety net, which is gold, and gold will start trending up. So in the meantime, it looks like we're already rejected today. Okay, now let me compare the ES chart now. Which is the market. And again, I'm going to drop down to this weekly chart. And I know a lot of people are saying that we're going to come back to these COVID levels and things, but you got to follow the structure no matter what, right? This is from the 4 hour. I actually been breaking these down on the 4 hour time frames and trying the best that I can to at least send them out, right? So what I want to point out right here is this right here. Okay, this was the previous structure. Okay, and then we have this one. Okay, so you have one structure here, another one here, and then right on the top we have all this supply. Okay, so you have three specific structures that we're going to go through. So far we are still downtrending, but look at the wick today. Okay, this is why I want to point out and confirm the areas that we're in. Number one, gold basically topped out at that all-time high. Okay, number two, we're bouncing on this demand right here on the previous structure. Okay, number three, we have oil that basically hit like some recession levels. And then today, if you guys go back and do some research on what Biden said, you'll understand a little bit more of why this thing sold off aggressively today. Now I'm gonna drop on a smaller time frame and just kind of show you the warning sign. Now it looks like there's a lot more red up here, and the volume came in aggressively. So it might be a sign of somebody unloading a heavy amount of shares here of their position as well. So keep that in mind. Very, very important. So now I'm gonna go back to ES, right? Now I'm gonna go back on the 4 hour because I already showed you the weekly. Now I'm gonna show you one more time, just so you can get a clear picture. Okay. Here we go. Here's the bottom of that base, that 41.45. Psychologically 41.50, 41.40, if that's what you want to point out, or that 4100. Okay. So on the 4 hour now, we're gonna come check. I'm not saying that this is the bottom of the market, guys. All right. Again, a lot of this I'm just correlating gold, correlating the futures, correlating oil, and showing you guys how things work with the futures, and not to ever get biased. Understand first and foremost what is going on in the market and how the catalysts are driving the markets, but also respect the supply and demand. The demand levels are the ones where we bounce from. The supply is the ones we'll reject from. So no matter what goes on in the world, no matter what kind of catalyst is out there, first and foremost, understand the level that we are in, and then all the catalysts and the upgrades and you know, the day by day type of news that happens is extra. Okay, don't use them as indicators to tell you to go bullish or to stay biased to a certain direction. Use the charts and know exactly where we're headed and why, where we're bouncing. Okay, you don't have to worry about the, oh, why did we just bounce off, you know, 101 level? Well, it doesn't matter. That was a support, so it's bouncing. Okay, or why did we break? Well, it broke, so go in puts. Okay, don't worry about the why. Okay, come in and know that there is more buyers or there are more sellers, whichever one comes first, and know that we are at demand levels. Either we're breaking up, we're breaking down, we're retesting from the bottom, retesting from the top. I mean, pattern breakout, whatever it is, follow that. And who cares about the news, right? Now, be mindful. Yes, don't throw it to the side and say I don't need it, because we do. But again, use it to your advantage, not your disadvantage by getting biased to something. Okay, so here we have the ES chart, and we finally had broken yesterday. Okay, so yesterday got a little crazy, and this thing did drop, and I know a lot of people did play puts, and I do have my alerts at this 4150 and even down this 41 level. The reason for that is because this is a previous low that we had on volatility and an increase of volatility, and then this thing just ran those next 2 days. So we did break this 4250 to 4260 level. Okay, this previous demand here. The high is that 4280 and then the 43. So right now what we're doing, just because we have a solid green candle doesn't mean that everything's going to be bullish. But I did just show you guys how gold correlated with the markets and the way that it's playing out. So moving forward, this is what I'm going to look for. I'm going to look for this area to reclaim. Right now it's hitting for the first time. So naturally what's going to happen, it's going to reject just a bit on the smaller time frames. I don't know what it's going to look like towards the end of the day, guys. I'm making this video while the market's open. I am in a position, but again, I just set alerts and I just kind of relax and let it do its thing. So the supply and demand here, this demand needs to turn back into demand in order for us to be back trading in this range. Once we can stay above this range, guys, I think that we can trade sideways in the market for quite some time and then let it do its thing, and then allow the stocks in general just to cool off, you know, build some patterns, build some accumulations, you know, get ready for some, you know, small reversals and things like that. But otherwise, the way that it's looking right now on the 4 hour, it's still looking a bit bearish. The sentiment in general, it's still a bit bearish. Okay, remember that. Bigger time frames, but also respect the smaller time frames, right? All right, so let's go on the 15 and let me just show you exactly what's happening right now. Okay. Isn't that actually a nice move today? I think this move was awesome. It's right here. So this is when Biden was speaking, and then right when he finished, the next two candles just ran up, and then like I said earlier, it's all retesting, and then the reaction now is bearish. So who knows? We might close down here at this 42.20. I mean, what if we close at 42.80? I don't know. It's barely 10.26 for me, and that's Pacific Standard Time. So whatever this market provides, we still got to respect the levels, understand the supply and demand, the way that the futures are moving, and things like that. Okay, so here we go. This is what we're going to look for on the ES. We need this to reclaim again for us to go a little bit bullish short term. Otherwise, it's going to reject, come back down here to this 42 and this 41.50. It may stay down here before we come and reclaim this level again. All right. So here goes NQ. I'm going to show you exactly how it happened yesterday as well. And just to give you guys a little more confirmation, here is the breakdown on Friday, I believe. Yep. And then Monday, we pushed green. We rejected, and then the trend stayed to be our friend, right? So right here, it's almost like it might break just a bit more. But we did create a little base on the bottom right here. So that's a good thing. Okay. We do have this little base. So you're going to use this base right here, the candle bodies on the 4 hour time frame, as a support or a new demand. If we start breaking below here, the market is going to experience a lot more downfall. So get ready for some more volatility if that were to happen anytime soon, okay? I'm going to show you guys RTY again. It's a small cap. I like that RTY has been kind of holding these levels. I like where all the financials are at. If you guys haven't checked them out, please check them out. All this demand right here for RTY is pretty awesome. The way that it's been trading sideways, it's been holding, it's accumulating at these levels. Today, it held very strong, showing a nice green day today, which is cool. But again, I think the market is still healthy in a bearish trend because we are experiencing some volatile movements to the top and volatile movements to the bottom. And it's causing a lot of people to, get shaken out on their positions, whether it's calls or puts. People are trying to swing. People are trying to swing for the fences. And, I see a lot of misunderstanding in the market. And if you have that, it's because you're not looking at the bigger picture and you're not taking advantage of the, small support and resistance levels. Using the pre-market levels can help you and assist you in whatever ticker that you are looking for, no matter what is going on in the world. Right. And just to make that clear, and I'm going to show you right now, I'm going to use Apple just for an example. Here you go. Here's your high. Okay. And then here's your low. All right, so I'm just marking the pre-market highs and the pre-market lows. You can see the way that it's being respected and the way that it's moving above and below or anything like that. Right. So look at this. There's your rejection. There's your rejection, an opportunity for you to short it, an opportunity down here to grab some calls. Why do I have these two blue lines? Well, let me show you. Here we go. Here's your demand, here's your supply. And look where Apple rejected again. Apple's rejection. So the trend in general, the way that things are moving still on a smaller time frames are a lot bearish still. Okay. The market is still taking in the catalyst. It's still absorbing everything that is going on. Okay. So it's good to understand that. Just remember that. Do not get biased on what you're trading, because the minute you get biased, you are going to take some big losses. Okay. Remember that, please. Okay. Respect the supply and demand, the support and resistance. If it's hitting your stop loss, get out. If it's at your take profit level, get out, walk away clean. Okay. Walk away with small losses and bigger wins. That's the way that we got to take these markets, right? All right. So let's go take a look at oil again, because I see it right now trying to move again, and it's very volatile. Okay. So here we go. Here's your retest. I know I had a little small pattern right here. This little pattern. So it's going to have a nice little retest. I think I'm probably going to be answering some short positions just to scalp. I actually was able to scalp some of this to the downside. So that was pretty awesome. But like I said, you don't get biased. You right away enter your position and then just get out. I wrote it on one 15-minute candle, and I was more than happy to take profit. I did not get biased, even though I saw a lot of selling pressure and a lot of volume. I don't care what's going on. Now, most people would have entered and they would have got biased on something like this, and they would have been holding their position. Some people would have probably tried to buy the dip down here and then bag held it all the way down here until they decided, to take the loss. And then you're sitting up here wondering why you never took your position, because now you're bag holding something that's going against you, right? So always respect your levels, guys. Maintain your composure, maintain your judgment, stay clear of any bias or crazy direction that may happen, because everything is moving up and down right now, and the market is literally giving you so much opportunity to trade this up and down on all kinds of time frames. So but yeah, we'll see. We'll see if this is going to be the short-term bottom for the market down here, /ES. We're looking for this 41.50 and 41 to just kind of maintain. If it starts breaking below, guys, you know what to do. Okay. Again, I'm not sitting here saying that this is going to be the full-blown bottom. Be aware of what is happening in the markets. Okay. And respect your stop loss levels. All right. So I'm gonna leave you guys with that. Hopefully this kind of helps you understand just a little bit of what's going on in the markets and take advantage of those huge moves. and whether it's up or down, just take advantage of everything that's going on, right? So I'll leave you guys with that for now, and we will revisit probably towards the end of the week and see where the market is at. All right, see you guys on the next one.